Hi, IBD. I'm Meredith Heyman. This is Industry Insights. Thanks so much for joining me. From Salesforce to Snowflake, we're talking software and how the software as a service or SaaS model impacts revenue for this sector. We'll also discuss how AI is impacting the industry and what investors need to know about the shifting market. Joining me to download on the software sector is Barron's reporter Adam Clark. Adam, thanks so much for chatting.
Hi, Meredith. Thanks. It's great to be here.
Absolutely. Now, what's important for investors to know right now about the software sector?
Sure, there's a couple of things to think about the software sector. Firstly, there are the trends that are always driving the software market, which are about digitalization, how much companies and how much consumers are willing to spend on software right at the moment. But it's also important to bear in mind the macroeconomic conditions that software companies are facing. And then I would also add technological trends. You mentioned AI there. AI is a huge topic, and the integration of AI with software in the market. And lastly, I would just say as well, geopolitics is something to bear in mind. Although US-China tensions are mostly focused around hardware at the moment, it's also something that could have a bearing on the software market in the future.
And can you tell us more about the factors influencing the sector over the long term?
Sure. So we've been talking about digitalization of the software market, and especially software as a service or SaaS has been going through a huge growth period pretty much for the last couple of decades, and especially then during the COVID pandemic, where we saw growth reach kind of historic rates, really. And then after the pandemic, we've seen a bit of a collapse in growth rates. We've seen macroeconomic conditions change. We've seen interest rates go up to levels that we haven't seen for a long, long time. That's impacted valuations in the sector. Obviously, software companies are largely valued as growth stocks. That means that they benefited when interest rates were low. They've been hit now that interest rates are higher, and that's increased the discount applied to their growth in the future. And then other things, generative AI, the growth of generative AI in the last year, really that excitement has been what has propelled the market after a bad year in 2022.
Yeah. Now, when the industry began its shift and its transition to the software as a service model or SaaS, that was huge for the sector. Now, how does the SaaS model impact the revenue trends that we're seeing for companies over time?
Sure. So the shift to SaaS, the big change that it meant that software became a more predictable revenue source. Instead of having to install pieces of software on hardware, you were just making it available via the cloud. You were charging a subscription license. It became a much more predictable method of gaining revenue. And it was also easier to scale because you're scaling everything in the cloud. You just have to add more server resources instead of having to have more hardware with your client as well. So that's been a big difference. However, now in just the last couple of years as well, we've seen a shift away from straight subscription fees towards the consumption-based model, where customers are paying not just a flat subscription fee, but they're paying based on how much they actually use the software by various metrics. And that's been quite important because with the growth of automation, it's not necessarily the fact that more users track exactly how software is used. So that's been a big change.
Now, where and how is the industry integrating AI into its platforms?
Sure, it seems like every week there's a new AI integration announcement from every software company. Every software company says they're doing it, integrating generative AI. I think we are seeing it in various areas. Adobe, for example, a very important software company, one of these companies that has gone through the transition from being a traditional software to a SaaS company. And they were a company that originally people thought might be put out of business or at least severely hurt by AI because it would become easy to generate images, it'd be easy to do all the publishing and design. But actually, we're finding that now they're offering their own generative AI products. And because they have the licenses, because they have the stock images they've licensed over a long time, they can offer a safe and company-friendly way to do generative AI. Other companies, Salesforce, the big customer relationship management giant, they have their own AI called Einstein. In some ways, this is similar to ChatGPT in that there's a chat element which helps with, for example, customer service. producing agent responses, but it can also produce customized reach out to customers, and it can generate emails when the company wants to reach out to their customers. So those are the kind of areas we're seeing it in. We're also seeing it in cybersecurity. Companies are now automating threat detection in a way that was not possible before.
Now, you mentioned Adobe, you mentioned Salesforce. What are the other big winners and if losers when it comes to integrating AI into their platforms?
Sure, it's very difficult to say this early on in the AI market. It's important to say the winners, or the guaranteed winners we've mostly seen, have been in the hardware market. Obviously, you're thinking of NVIDIA. In the software market, Microsoft obviously is a huge player, although it's not a purely software stock. But they're the ones who are now testing the market with their Microsoft Copilot product, and they're testing what consumers and businesses are willing to pay, whether they're willing to pay a premium for an AI-enabled product. So they're charging $30 a month for their Copilot product. And that's the kind of pricing that it'll be interesting to see whether they get people to accept it. In terms of losers, well, as we can see with Adobe, someone can go from a loser to a winner quite quickly, but there are companies that I think are facing more fundamental challenges. Chegg, the educational software company, they were the very high-profile one that were hit earlier this year. Their stock fell almost in half when they said that the students using ChatGPT was affecting usage of their own educational software. Now, since then, they've integrated their own AI offerings. In fact, they've integrated ChatGPT as well, and they've partly bounced back, but they're still not where they were. And I think there are serious doubts about where the educational software market can go from now. And other companies that are maybe fundamentally challenged, UiPath are an interesting one. They're a specialist in robotic process automation software. This is about automizing data tasks, data entry, web scraping, those kind of tasks. And there is a concern that that might now be taken over by AI. Again, UiPath say no, our tools can work with AI. This is actually going to be a boost to our business. But I still think there's a debate at the moment as to whether robotic process automation is friend or foe with AI, or whether they are ultimately competitors.
Now, when it comes to AI having a real material impact on the sector, where are we in that timeline?
Extremely early. I think it's very hard at this point to point to indeed any single software company which can say that AI is a meaningful source of revenue for them right now. Even Salesforce, which have gone in very heavy on AI, their CEO, Mark Benioff, he says it's one of the greatest technical revolutions he's seen, and he's been in the game longer than almost anyone. But at the same time, they're not producing meaningful revenue from it. So as I say, it'll be very interesting with Microsoft to have launched this Copilot. That will be a first real test of how much people are willing to pay. But this is definitely something that's going to play out now over the rest of the decade, really.
Yeah. Now, this is a competitive sector, competitive industry. What's the best way for different companies to stand out?
Sure, it's very interesting at the moment. And now that we're in this kind of slightly more low growth era, and that's a relative term, we're talking about companies going from maybe 30% annual growth or even well above that down to, say, mid-teens annual growth, which would be great for a normal company, but is not great so much in the software sector. What you should be looking for maybe with SaaS companies is there is the rule of 40. This is the suggestion that a SaaS company gets a premium if they can show that their combined revenue and profit margins are equal to or greater than 40%. Now, that means that if your revenue growth is slowing, then you should be able to show that your profit margins on your cash flow are increasing to make up for that, so that you can reach that kind of magic 40% number. So that's a big thing. Obviously, if you can show that you're on top of technological trends, if you can show that you're integrating generative AI and managing to get your customers to pay for it, that's an important aspect. Because if you're just paying for additional AI resources and you're not getting extra revenue from your customers to make up for that, then that's not something that the market will reward. So I'd be very interested in companies that can show that they are more efficient when revenue is slowing down, or companies that can show that they have sustainable revenue growth at higher rates in the future.
Now, guidance from the major players in the software sector can have a bit of a ripple effect on the group as a whole. Who are the leaders that we should be watching, that investors should be watching in terms of a sector outlook?
Sure, we've mentioned them before, but Salesforce, I think the customer relationship company, they're very important. partly important because of their CEO, Mark Benioff, because he was partly the father of this cloud computing model. He founded his company in 1999. He's still the CEO of it. So what he says is very important about the market because he knows this market inside out. And they're a company that expanded very rapidly before the pandemic. They bought Slack, the messaging service. They embarked on a buying spree. Since then, they've cut back very strongly, implemented layoffs, implemented stock buybacks. So I think if in the future you saw them going back to growth mode, that would be a big signal for the industry. In other sectors, cybersecurity stocks often move together, but I'd be very interested in Palo Alto. Specifically, they have a very broad suite of cybersecurity software, more so than maybe some of the more specific stocks. So therefore, they can act as a bellwether in various different areas. And then, obviously, the big companies, Microsoft as well, is at this point going to be very important for the entire software sector.
All right, Adam. Well, we'll be watching. Thank you so much for joining me. This is Industry Insights. I'm Meredith Heyman. We'll see you next time.